What's up, y'all? Happy Monday and welcome to the latest edition of the Hashing It Out live stream. I'm your host, Colin Harper, head of content and research at Luxor Technologies. Today, we've got a lot to get through. Bitcoin absolutely dumped last night. It's squeezing hash price after a week where we had a new difficulty all-time high set. So we're going to get to that on the data front. And on the news front, we're going to be covering a lot about the Ethereum merge and what ETH miners are doing post-merge and some of the data that we've seen after the fact, as well as the Ethereum proof of work fork, which is not off to the best start. And then we will wrap up with a little bit of discussion and analysis over the most recent production and operations updates from public Bitcoin miners. So with all of that said, we're going to jump right into it with some hash rate index data. So as I was saying right there in the intro, as most of you know, Bitcoin really shit the bed last night. It went from 19,400 and then dropped off a cliff, bottoming locally at 18,400. It's rallying back this morning. We'll see how long that lasts, but we are below 20,000 and hash price is feeling the squeeze for sure. Now, as you can see right here, taking a look at the hash price chart, it kind of looks like a quarter pipe, honestly, or a half pipe. Oh yeah, a quarter pipe, which is pretty funny. You can see hash price just getting battered by this most recent move. And right now, we're at roughly just over 7.5 cents per terahash per day. Now, like I said, this came on the heels of Bitcoin's difficulty setting a new all-time high last week. And as you can see from that all-time high, hash price dropped off significantly. That also coincided with some negative price action for Bitcoin. So it went from about $9 or 9 cents per terahash per day down to about 8 cents per terahash per day. And now we are just above, like I said, $7.5 per terahash per day. Now we are about a, a quarter of a percentage point or a percentage point away, I should say, from hitting all-time lows here with hash price. I believe, based on some analysis that we talked about earlier in this live stream or and past live streams, the all-time low for Bitcoin's hash price is about 7.25 cents per terahash per day. Now that's for daily average all-time low. The actual all-time low, I think, is just below 7 cents per terahash per day. But all that being said, we are inching closer and closer by the day to that, and obviously main culprit here, hash price, is absolutely surging as it's dropping on the 7th day, which was to be expected after so much hash rate comes offline. You knock miners who are higher up the cost ladder and lower down the efficiency ladder off of the network. But that being said, if we look at the monthly, it's just been on an absolute tear, right? It entered or halfway through August, we were still at about 200 exahashes a second, and currently we're at 232 exahashes a second. And this has led to 4 upward difficulty adjustments in a row. The August 31st one being the absolute killer at 9.26% adjustment or increase. And the last one was a 3.45% increase that put us at 32.05 trillion for the difficulty. Now, all of that said, there's a chance that the next difficulty could be down, given the fact that mining profitability is being squeezed and Bitcoin's price is also in the toilet. Like I said, we might see some miners drop off and ease hash rate a little bit. Block times will slow down. Right now, they're at 10 minutes and 2 seconds. Wouldn't be holding my breath. At this point, it's kind of a coin toss. It could go either way. We're not even halfway through the epoch currently. So, who's to say it's anyone's ball game at this point? But if we do get another positive adjustment, it will be the longest streak so far this year. Going into this year, we had 2 upwards adjustments that were followed by 4 upwards adjustments. And so it was 6 in a row, but really for the year, it was only 4 in a row from, I think, January to the beginning of, to the end of February or just the beginning of March. Don't quote me on that. I'll have to double check those numbers. But all that being said, we've had the longest streak we've had so far this year is 4 upward adjustments in a row. And if we get another one next week, it will be 5. So, yeah, like I said, not really a good time for mining profitability. Hash price really feeling the squeeze right now. And if we look at it on BTC terms, we've actually been setting, we actually just set an all-time low. in terms of sats per terahash per day. Right now we're at 398, so we are officially below the 400 sats per terahash per day mark. And can I say, y'all, hash price trades and backwardation, we can only expect this to go further down, and that is a depressing chart. You want to see one that's even more depressing? Look at the 5-year. I mean, it's just a slope, long fall all the way down. So anyway, not to put a damper on anyone's Monday, but maybe we'll turn to something that might make y'all feel a little bit better, which is ASIC prices, which are starting to show signs of stabilization, but they are still dropping somewhat. Our update last week had new gen rigs falling by about 1%. Mid gen rigs rose by 0.8%, which is, don't read too far into that. They're probably just recovering from being oversold earlier in the year because of newer efficient equipment coming online. And then old gen equipment fell by about, I think, like 2.2% or somewhere in that range. So, obviously mining profitability goes down, ASIC prices go down with it because, if the gold rush isn't as hot, then people don't want these things as much. So all that to be said, ASIC prices looking pretty good right now. We've said it before in this live stream, and I'll say it again. They're probably going to go lower before this bear market is over, right? We're still pretty far from all-time low territory for the new gen rigs. And we're closer to all-time low territory for the mid-gen rigs, but we've still got about, I think, $5 or so per terahash that we need to drop off before we see that hit. So good buying opportunity. Probably will get a better buying opportunity, but nothing's guaranteed, right? If Bitcoin U-turns from here, then all of this analysis kind of goes out the window. We have to start from scratch. Just going to take a look at Bitcoin prices just to point this out. And we don't really look at Bitcoin prices for ASICs on this live stream, or I don't think I have in the past, and I need to start doing it because this is obvious to people who have been in the game for a while. But if you look at actual Bitcoin prices for ASICs, they kind of stay in this like channel, right? There's this trend that they kind of bounce up and down, and depending on whether or not Bitcoin's ripping or dipping. And for miners, most of the time it makes sense to just do your accounting in Bitcoin. I mean, that's why you're mining, right? Like you want to make sure that you're accumulating more Bitcoin. Some miners obviously are looking at USD returns, but I know a lot of you are looking at BTC returns specifically. And, if you bought a rig for Bitcoin back in like, let's say November of last year, you're looking at basically the same prices today. And I think that, again, just kind of underpins the fact that when we look at rig prices on a BTC basis, things are a little steadier than when we look at the USD. Now, all that being said, the trend is down right now because obviously Bitcoin's getting crushed. We'll see where this goes in the future. If ASIC prices continue to fall, we'll see this change, obviously. So, well, that's it from the data front. So we're just going to go ahead and dive right in to our first news topic today, which is Bitcoin mining stock updates. I'm going to take a hit of coffee really quickly, and then we're going to get into it. So public Bitcoin miners have published their August production and operations updates. And as this headline suggests, they are expanding despite the bear market. August, we saw a big rebound in both hash rate put online and also Bitcoin mined from some of the top mining companies. In fact, out of all of the miners in our analysis, which we published last week, every single one of them except for one, which was Argo, had an expansion of hash rate, and every single one of them actually ended up mining more Bitcoin over the month than they did in July. Now, obviously, a lot of factors there, right? Like there were heat waves in July that forced miners to turn off their machines, but nonetheless, productivity and operations are on the up and up for most of these miners. So taking a look here, you can see the percentage change for these miners for their hash rate in terms of petahashes a second. Marathon saw the largest increase. That is largely because Marathon wound down its facility in Montana over the summer, and now they are getting most of that capacity back online in Texas. So some of those are probably new machines. A lot of that, though, is just former capacity that they took offline and are finally getting a new home. And Core Scientific came in, CleanSpark on a percentage basis, had the second largest increase of hash rate, and then followed by Core Scientific. And oh no, sorry, doubling back on what I said again. After Marathon, Iris had the largest increase, followed by CleanSpark, and then by Core Scientific. And then outside of that, besides Riot, which had a 9% increase, the rest of the miners in our analysis were in the 1 to 2 to 4% range in terms of increases. Now, all of this hash rate has obviously meant increased Bitcoin production over the month. Again, because Marathon migrated basically or a good chunk of its fleet to Texas, they saw the largest increase in Bitcoin production over the month, followed by Iris, who saw the second largest increase, and then Riot, which again was one of the miners most impacted by the summer heat waves in Texas. So they had a lot of capacity come offline in July. They saw the fourth most increase in their Bitcoin production over the month. DMG saw a 27.78% increase, and Core Scientific with a 9.25% increase. So yeah, Hut 8, 13.64% increase, Bitfarm 6.8% increase, and CleanSpark 2.86% increase, and Hive at 3.57%. And so going further, looking at how this is adding to these miners' treasuries, the selling from these Bitcoin miners slowed down in August, but we still saw a good deal of it. Core Scientific leading the pack here in terms of Bitcoin sold. They sold 1,125 BTC. Bitfarm sold 427 BTC, and Riot and CleanSpark both selling 388 BTC. And I'm not going to go through the rest of the metrics on this article. Just check it out at hashrateindex.com/blog. We've got some of our other metrics in here, such as market cap divided by petahash, and also our EV divided by ASIC, active ASIC value comparisons. Most of this, one thing I will say about this, because ASIC valuations are continuing to get compressed, a lot of these ratios dipped over the course of August, and also miner valuations are falling as well, given their stock prices falling and things like that. So we saw some decreases in this ratio, which means some of these valuations are coming back to earth. Some of them were way too high in the bull market, and they really didn't reflect reality so much. Last thing I will note is we're starting to see, going back to the selling, we're starting to see treasuries kind of refill a little bit. Every single miner in our update saw their treasury grow, even if it was by a little bit over the course of August. And just to highlight here, right? Like, a lot of these miners were stacking Bitcoin in the bull market, and they ended up selling low and mining high. So maybe there's some learned lessons that they can execute better on next bull market, but we will see. That remains to be seen. One more thing I want to highlight from some of our public mining stock analysis from Balmy Investor, one of our contributors. He posted a great article of how much hash rate some of these miners have on order for the rest of 2022. And out of the miners that we profiled, which were Riot, Hut 8, Marathon, CleanSpark, Argo, and Bitfarms, we found that there is about 17 exahashes worth of hash rate on order for the rest of 2022. So go check this article out too on the blog. Some great analysis from Balmy. And with that being said, we are going to jump right into Ethereum's merge and how that is affecting the altcoin GPU mining landscape. So I posted this article on Forbes over the weekend as part of my monthly senior contributor output. And if you've been following the live stream or our newsletter, you know that we at Hashrate Index broke down some analysis of like how much hash rate some of the GPU mining alternatives, namely ETH Classic, Ravencoin, and Ergo, how much these networks could soak up after Ethereum merged to proof of stake. So this finally happened. Ethereum merged to proof of stake last week, and we finally started to see some of these migrations work out in practice. Now, the thing that caught my eye, and we're going to look at some real-time hash rate in a minute. But in terms of mining profitability before and after the merge, we just saw hash price absolutely plummet for these miners, or for these, for the miners mining these altcoins. On September 14th, Ethereum's classic hash price was $7.45 per gigahash per day, and it fell 71% to $2.17 per gigahash per day immediately following the merge. Ravencoin, similar story. $18.80 per gigahash per day falls to $10.13 per gigahash per day. It's a 46% decline. And Ergo falling from $3.25 cents per terahash per gigahash per day to 74 cents per gigahash per day, a 77% decline, even more brutal than Ethereum Classic. So miners started flooding these chains in the hours leading up to and in the hours immediately following the merge. And let's take a look really quickly at how this looks in practice. Now, as you can see, this is Ethereum Classic's hash rate, kind of the poster child of this whole post-ETH mining world, right? As you can see from this chart, in the hours in the hours leading up to the merge, Ethereum's Classic hash rate just starts taking off. The day before, it starts the day at about 60 terahashes a second, and then it ends the day at about 90 terahashes per second. So 30 terahashes added. And then the merge happens in the early hours of September 15th, and then it just explodes. It goes from 92 terahashes a second to a peak of 311 terahashes per second, which is an all-time high for Ethereum Classic. And since then, it has tapered down completely. It's gone down to 183 terahashes a second. Miners kind of got ahead of themselves. A lot of them were starting to just boot up their machines, start mining Classic, and they realized that they're actually not making as much money as they thought they were going to be making, and now they're starting to wind down their machines. Only the most energy efficient, and those miners, only the most energy efficient miners and those with the cheapest electricity are sticking around. If you read our blog on Hashrate Index about this, we summarize that ETH Classic could probably absorb about 10% of Ethereum's hash rate. It's looking like right now it's absorbing a little bit more than that. And we'll see how long this lasts, right? If ETH Classic's price continues to tank from here, the crypto markets are getting hard right now as the dollar strengthens. We anticipate that this number will continue to drop. And it's the same story more or less for the other altcoins in this analysis. Ergo saw a huge spike. Hard to take this little spire right here in the middle of the chart seriously, right? It says the all-time high hash rate. Real-time hash rate was 456 or 457 terahashes a second. That was just a blip. You can kind of look here. It looks like it got near to 200 terahashes a second on a steadier basis, 220 terahashes a second towards the end of September 15th. And since then, it has dropped off to 76 terahashes a second. The only coin that has really not, in this analysis, that's really kind of stayed steady is Ravencoin. Funnily enough, Ravencoin's hash rate kind of, it more or less quadruples from September 12th up until to the merge. And right now it's, staying steady at about 18 terahashes a second, and it hasn't drawn down nearly as much as the other networks that we analyzed for this hash rate absorption analysis. And that doesn't totally surprise me, considering when we looked at hash price, Ravencoin's hash price was ridiculous compared to ETC and Ergo. I mean, the margins for Ravencoin were much higher than the other two. So it looks like it can kind of hold on just a little bit better than its competitors. Now, all that said, these altcoins are not the only coins that can be currently mined on using GPUs. Obviously, these are the most the most lucrative and the ones that have obviously drawn the most attention. But we also would be remiss if we didn't cover Ethereum Proof of Work, which ended up launching around just before the merge. I think it went live maybe on the night of the 14th or maybe the early hours of the 15th. I'm not really totally sure. but since launching, it has been driven into the dust. We can see right here the price spikes to $51.35, and since then, it's just been absolutely driven downward. The current price right now is about $6. So not too shocking, right? Like you had a bunch of Ethereum users who got this airdrop and then wanted to dump it as quickly as possible. And then obviously the miners mining it probably don't have very much conviction in its long-term success, including the miners who orchestrated this fork. And for those of you who don't know about the Ethereum proof of work fork, I would direct you towards a blog that we wrote and a newsletter that we sent out in, I believe, late August. Let me see if I can find it. Yes, what will Ethereum miners do after the merge to ETH 2.0? We cover the Ethereum proof of work fork in depth here. Too long didn't read. A bunch of miners, mostly Chinese ETH miners, put together this group to fork the Ethereum code base to keep it proof of work. And there were a few things that were put into this fork that I think scared away a lot of other miners who may have otherwise been, more open to a fork like this. For instance, the biggest thing was the Ethereum proof of work forkers decided that they would no longer send transaction fees to miners. EIP 1559 for Ethereum burned transaction fees, and miners no longer receive them. The fork was going to reverse that, but instead miners would not receive the forked coins. They would go to a multi-signature address controlled by the miners who were running the fork ostensibly. They never really told us, right? But that's the idea. So I think that was one of many red flags that just totally turned people off from this fork. And it really has not gained too much traction, not least of which the fact that the price is in the toilet. Now, this is ethwmine.com. This is a ETH proof of work pool. And you can see right now that the network hash rate is only 38 terahashes a second. That's just kind of a drop in the bucket. Ethereum's hash rate before the merge went live was about 870 terahashes a second. And as you can see, it's just really not gaining too much traction. If you want to take a look at an ETH proof of work block explorer, I recommend oklink.com. You can see all of the stats here. Blocks are coming out, on an average 13 seconds. The chain is ticking away. But as I said in this blog post in August, the real uphill battle for this thing is really, there are a lot of uphill battles, but the main one is developer share and also just general community and conviction, right? Like a lot of the Ethereum community, maybe not miners, obviously, right? Because miners want to be mining Ethereum, but most of the Ethereum investors and let's say enthusiasts were really bullish on the merge and they wanted it to happen. They wanted to see proof of stake. They liked the idea of Ethereum trying to move to a different consensus mechanism and what they see as kind of, technological innovation. And because of that, all of the developers of all of the DeFi applications that made Ethereum so popular in the 2021 bull run, they're going to stick with proof of stake Ethereum, right? None of them are going to spend the time building for a chain that they don't see as legitimate, nor do they see as really viable long term. And a big portion of this, in terms of the developer and infrastructure community, are stablecoins, right? Stablecoins dominate DeFi applications. They dominate the loan and automated market maker space. And Circle, USDT, all of these, or Tether, all of these stablecoin issuers said, we're not going to support this. There's no way you're going to be able to redeem these stablecoins on the Ethereum proof of work chain. We're only going to honor stablecoins on the proof of stake chain. So without stablecoins, developer share, and really community, how should we say, rallying, a community rallying around this fork, and a legitimate belief and conviction in its long-term viability, this thing was kind of a non-starter. It was kind of doomed to fail at the start. Now, that doesn't mean that it's not going to be around for a while, right? Like there are plenty of forks of Bitcoin and other forks of Ethereum and altcoins that were built on the Bitcoin and Ethereum code, that will continue to thrive or continue to exist just like this one. It's just not going to thrive necessarily. And kind of to cap off the discussion of this, we can look that there's already been some technical blunders on the chain. There was a replay exploit on the Ethereum proof of work network. Now, this was specifically an exploit of a, as this CoinDesk article says, faulty third-party contract. It was attackers used the Omni bridge of the Gnosis network to conduct the replay attack. Now, a replay exploit is when a transaction that is made on a forked chain and or its parent chain is executed on both simultaneously. So, if you don't implement replay protection and make sure that your chain IDs are widely publicized and that developers who are building on your network see these chain IDs, a fork like this becomes possible, an exploit like this becomes possible. So basically what happened here is that a user transacted on, I believe, on the Ethereum proof of work chain, and they ended up, or on the Ethereum proof of stake chain, the transaction ended up being replicated on Ethereum proof of work chain, and that ended up resulting in 200 ETH proof of work tokens falling in the hands of the attacker, which is only like $1,600. So this is not a very big exploit, obviously, but it just goes back to what I was saying, where if someone was actually maintaining this Omni bridge on ETH proof of work and actually cared about the fork and implemented the correct chain IDs and did it properly, this replay attack wouldn't have happened. But again, there's not too much adoption of this proof of work fork. No one seems to really take it seriously, neither miners nor community members. And so it would not surprise me if we see more kind of blunders like this, just because the chain and its applications are not being maintained, right? All of the Ethereum state, all of its smart contracts, all of the tokens, everything were forked and replicated onto Ethereum proof of work. So all of this stuff exists, but no one's around to maintain it. So again, wouldn't be surprised to see something like this in the future, and also not be surprised to see Ethereum proof of work kind of peter out and not see very significant market share. And with all of that, that is the conclusion of this episode of Hashing It Out. Thank you so much for joining. We love all of our viewers tuning in. If you have any feedback or have anything that you would like us to cover on next week's show or future shows, please reach out either in the YouTube comments or DM us on Twitter. Our DMs are open. And on that note, please give us a follow on Hashrate Index and Luxor Tech Team if you don't already. And if you would like to see the analysis that I break down in this blog delivered to your email every week, please subscribe to our newsletter at hashrateindex.com/blog. Everyone have a good week. Happy hashing, y'all. Take it easy.